Combank already hitting the boards, adding 0.75%, so not a bad market response.
We did see Commonwealth Bank slightly beating our expectations. We were expecting to see a cash profit of $3.5 billion, and they've actually come in at $3.57 billion, so up by 7%. The dividend, though, a little bit disappointing, coming in at $1.37, and that's only a rise of 4% compared to the cash profit, which was up by 7%, so lagging a little bit. But I guess one area that the market will focus in on is the revenue. Our revenue growth was only 3%, so quite sluggish revenue growth. And if we break it down, it is a difficult environment for the banks. If we have a look at the credit growth side of things, the housing market's quite important for the Commonwealth Bank. And in 2007, the housing credit growth numbers were at about 20%. And now 2012, the forecast numbers in comparison are only 2 to 4% growth. On the other side of the equation, you have funding costs rising. So since the global financial crisis, pre-global financial crisis till currently, we have seen funding costs up by about 1.64%. That's compared to the standard variable rate, which has only risen by about 1.34% in comparison. So altogether, while the result has come in ahead of expectations, I guess the market will be watching that net interest margin, which has come down from the previous half, down to 2.15%. In the previous half, it was 2.25%. So that's one of the things that the market's going to be watching. The other is the breakdown by divisions. And of course, we have seen lower trading as well as wealth management income hitting the bank. And if we have a look at wealth management, the cash profit there down by 24%. If we have a look at institutional banking and markets, we've actually seen cash profit there rise by 10%. But in that division, if we have a look at the market's income, that's seen a massive fall of 45%. Of course, the retail bank is a big one for the Commonwealth Bank, and we've seen the retail bank rising by 3%, but in comparison, Bankwest has done much better, rising by about 10%. If we have a look at the cost ratio for Commonwealth Bank, still higher than a lot of its peers. For the retail bank, though, we know that Commonwealth Bank is targeting 35% by 2013-2014. We have seen the cost ratio coming down for the retail bank down to 38.5%, so still relatively high. It's got a couple of years there to go with its core bank modernisation program. But altogether, the headline result, the cash profit number, ahead of expectations, and Commonwealth Bank should see a rise on the back of that.
It's sort of going to be smooth sailing, though, into the second half, given we may see a pickup in arrears if we are right and unemployment continues to rise. And that is a consensus trend that few would beg to differ with.
That's one thing we'll be watching very closely, especially given NAB's update last week, where we did see that bad and doubtful charge arising. We haven't seen that coming through in terms of Commonwealth Bank, but it will be something that will be kept a close eye on in the second half. But on the flip side, we're still expecting to see interest rates continue to fall in 2012, and that should be a positive for mortgage holders. So I guess we will be watching that bad and doubtful debt charge, but in terms of Commonwealth Bank's results, no sign of that rising.
Just as usual. All right, let's talk Westfield. The stock's popped 4%. A number of developments here. Not only did they give a share buyback announcement, but they talk about a JV offshore. Julia, is that welcome? Obviously it is in the early part of the session.
Well, buybacks are earnings per share accretive, so Westfield coming out with a pretty strong result today, and we've seen the shares rising 4% on the back of that result. And I guess it is a little bit surprising, given the soft retail environment that we are seeing globally, that we are seeing such a strong result coming through from Westfield. And I think if you have a look at its business model, one of the things that Westfield does really well is start a project from scratch and then see it through to completion, and a successful completion. We've seen that with the likes of the Westfield City store in Sydney, and we've seen that with London as well. So really starting to pay some dividends there. So Westfield shares doing very well today, as you mentioned, Carsten, up by 4%.